Hello once again, everybody. This is Rich with High Percent Trading. Thanks for coming in and watching this short video. In keeping in line with what we've been showing every day in the live markets analysis room and what we've been showing on newsletters and other releases, just trying to trade in the first half hour of our pit opens in the equity markets and trading in the first hour of the crude oil. We're going to recap the trades and show again the types of trades you should be taking when you're trading this. Now remember, trading is not a marathon. You want to try to get in and get out quickly, make your profits. You don't need to trade for long periods of time in order to make very nice profits every day in the markets. So I'm going to show crude oil first of all. What we're doing today is the same thing we did yesterday and the day before and last week and the last week before that. Nothing has changed. It's you want to trade a momentum running type approach in the first hour after the pit open. Of course, the pit open is a misnomer. There really is not a physical pit anymore that opens at 6 a.m. Pacific, which is 9 a.m. Eastern, but the old-time institutional traders still seem to abide by that, although crude's been moving very well earlier. But again, in sticking with the rules, that's what we're going to do. Now, this particular series of indicators is called the octopus, and as some of you know, if you've been following this, it automatically takes up to 20 different indicators, filters them, and produces one nice clean entry signal that actually you can automatically trade if you choose to do that. If not, you can manually trade it, and by automatically trading it, I mean it'll fire the entry signal. It'll fill the trade automatically and then put in stops, profit targets, and even trail those stops and or profit targets until the conclusion of the trade using whatever ATM strategy that you chose. But we're just going to show the setups here. Remember, we're going to follow the 2-arrow rule, which means we're only looking at taking 2 trades in the same direction. This was trade number 1 right here at 6 a.m. This is a nice trade that moved up about 18 ticks. And then this was trade number 2 right here. This trade moved up about 24 to 30 ticks depending upon how you managed it. So those were your first 2 trades, trade number 1, trade number 2. Now that brought us about 25 minutes into the session. That left another roughly 35 to go. In keeping in line with the 2-arrow rule, even though this trade was a good trade, this trade is ignored because it's more than 2 trades. Here was trade 1, this was trade 2. However, this short trade was a good trade entry right here around 6:43 Pacific time. And this trade continued to go on down until roughly 7 a.m. Very nice trade here. That resulted in about 35 ticks on a runner if you kept it. Now, the one thing to notice, just because that we've got to 7 a.m., what it means is we're not really looking at taking any more trades in using the accelerator method. This is called the accelerator method, but you can continue to manage your trade if you're in it. If you're in a runner or a series of runners, you can continue to do that. And crude oil continued to move down and make new lows in the session. It actually continued all the way down here to around the 43.05 level. Now that was roughly about 70 to 72 ticks on a runner if you were able to hold it. So this really points up the fact that once you get in a trade like this, you can stay with it. You should try to have a runner if you can, trade multiples. And this was a very nice trade to the downside. But again, just trading, taking trades in the first hour of crude oil, and then trying to manage it resulted in some very nice profits again today. And as we've pointed out in the past, if you follow these techniques, if you follow these rules, use these entries, you should be profitable 22 out of 23 trading sessions. Now let's take a look at a different market from today. This is again is Veterans Day, November 11th on our trading. All right, this is the Russell contract, the TF, the Russell 2000 contract. You can see that earlier on, it produced a really nice short signal here, but however, And this was about a half an hour before the pit opened. So unless you were up trading it early, and some of the traders do, you would not have been able to take advantage of this trade. However, we did get to our pit open, which is right here at 6:30. So we're looking at taking the next trade. Here's your next trade right here. All right, following the 2-arrow rule, we need to look back. This was arrow 1. This is arrow entry 2. Your first trade, you were able to get a nice scalp, not able to get the runner, but as I pointed out, this is extremely important in your trading. You cannot get discouraged when you enter a trade like this, and whether or not you got your scalp or not, if it comes back and stops you out, if your stop is tight right above here. Now some traders put their stop a little looser, make it here, but if you're going with the tight stop, and I like tight stops, you can go here. When you get stopped out, you re-enter on another trade one more time. It's called taking a second bite out of the apple, and that's when you get this reversal bar. Notice also you did get the trade signal here as well. So this trade, when you held the runner, went on to become just a monstrous trade to the downside. You can see that this market continued to go to right basically here. All right, and then I'm going to kind of recap what happened in here. So nice trade in here, taking profits, and then we're still within our 30-minute window period, aren't we? Still within our 30-minute window period. If you went and took this trade right here, this is the long trade, this trade got stopped out. All right, so that happens in trading. That's part of trading. Nothing is 100%, and that's why it's important. You need to manage these with tight stops, but the entry would have been here. You would have had a second entry here, and unless you had a real tight stop, a real small scalp target, you would not have resulted in a scalp here. So let's call this trade number 1 and trade number 2. Both of these got stopped out. Using relatively small stops though, 6 to 7 ticks, right? It stings a little bit, but as you're going to see, if you stay with the methodology, and that's what's important, stay with the discipline of trading. So to go back, you had trade number 1, trade number 2, resulting in a nice profit. This trade entered and got stopped out. This one, if you re-entered the trade, also got stopped out. All right, and then we're to the downside here. Trade here or here, depending on how you handled it. If you handled it here with a very tight stop, there is a possibility you got hit one more time, right? For a lot of traders, that's frustrating. But again, if you trade this methodology over and over and over again, you'll see what I'm talking about. This trade went on to make a huge amount of profit. So you re-entered one more time here, it drove it all the way down. This trade was about $500 on a runner if you could have held it down here. Actually, the market continued to drop lower, all right? But these are different type of entries in here that we're not going to cover. A lot of traders got these entries, but I just want to cover this. Take it down through here. This brought us into our basically half-hour time frame right here. So we're not looking at trading this method anymore. But again, very nice trade to the downside. And you can see that we looked at the crude oil and we looked at the Russell, and both of those, again, applying this methodology. This is a momentum-based methodology. Nice profits in a relatively short period of time. All right, here's another one of the markets that we follow here at High% Trading in the live markets analysis room. This is the Nasdaq. All right, a lot of you traders trade the Nasdaq. Again, the important time we're looking at is going to be the pit open, 6:30, right here at 6:30. Now, notice what happens if we look back at 6:30 and follow the 2-arrow rule. We had arrow 1 and 2 here. This was arrow 1. This was trade entry arrow 2. So if we follow our rules, we will ignore this trade setup. All right. If for some reason you were trading this and forgot about the rule or just chose to ignore it, notice the trade still got a nice scalp. Now, it doesn't mean that the third or fourth time doesn't work, but again, we like to take the high percent probability trades, always trading the high percent probability trades, so that the third or fourth one is not as high percentage. They still work a lot of times. This would have gotten you a nice scalp, but no runner. But again, the way it's taught here, there's no trade here. We didn't get a trade entry until right here. So roughly about 7 minutes went by. You got a very nice trade entry here, short at this level. You can see we went down and made several new lows on the way down. Very nice profit on the way down. We're still within our 30-minute window period again. Again, looking at taking the accelerator type trades, these momentum type trades within 30 minutes of the pit open. Here was the next sequence of trades. A short trade here for a scalp. Runner got stopped out. Remember what I said about the second bite out of the apple? Extremely important. These markets, the way they're designed, they're very efficient. They're always trying to back and fill, and they're always trying to take traders out of stops. And if you recognize that, and recognize that at times these markets are manipulated, you can turn that manipulation to your advantage. So in other words, instead of saying, you know, darn, I entered this trade and I got stopped out, I view this as just an absolute opportunity, again, for a trade. I like these second trade setups like this. Here it was. That was the short entry, and you can see that this trade went on to make a huge amount of money on a runner. Big runner all the way to the downside. Now this takes us to our 7 a.m. All right, this took us to 7 a.m. and now we're actually employing, these trade arrows are actually a different type of trade setup. I don't want to cover these right now, but for some of you who are familiar with, this is called the breaks, right? This octopus was running this, called the breaks, and that was the trade setup here. You can see that this trade went on to make very nice profits as well to the downside. All right, but that's not the purpose of this video. This video is only showing trading in the first half hour. What I wanted to show briefly for some of you who may not be familiar, you're always welcome to come in this week to our live markets analysis. This is what we actually covered in real time this morning. Here's the website, high%trading.com. You can come in Thursday or Friday, again, early, 6:20 Pacific, 9:20 Eastern. Just click on the link and register. You can come in. We also have a tutorial, a tutorial webinar that goes over support. For those of you who are new or on trial, that'll also be on Thursday at 1:30 p.m. Eastern. And if you like, you could click on the newsletter here as well. If you have not taken a free trial yet, you're eligible to do so. You can get a free trial of all of these indicators and all of these strategies that are here in High% Trading. If you just go to the web page, click on free trial, you just fill out a little bit of information, just your name and email address. Nothing else is required, and we'll get that out, and you can follow these in real time. Okay, so again, we're just being consistent, showing the way that we approach this every day in the room. And if you approach the markets this way, using what we call the accelerator during times that you expect the markets to move, and then using a different type of approach, we call it the breaks, when we're getting into more in the way of retrace trades. Again, as we've pointed out, applying patience, discipline, and timing, you should be profitable 22 out of 23 trading days every month. Thanks for watching. Take the trial if you haven't seen it or done it yet. Please try to join us, and I hope this helped. Thanks again, everyone. Bye now.